Welcome traders. This video has been produced to introduce my new Signal Provider account, TurtleWins. I'm going to have to keep it very brief, under the 15-minute or so mark. I'll be covering each point as quickly as possible to ensure that I can include everything. Please look out for future videos that will expand in greater detail each point. So first thing I'd like to introduce is just money management. I recommend for accounts at around $1,000, you should be trading lot sizes no larger than 50 cents. I do enter into up to 4 or so entries at one time. So we're here to ensure our success, not to be like the hare that rushes off and doesn't complete the race and fails. Typically there's only 5% or so of the traders that are successful. The rest burn their accounts, so just keep that in mind. So here we're going to be covering what are some of the reversal signs to look out for, what I mean by pivot points, trend lines and historic levels, flags or trend continuation breaks, a little bit on Fibonacci, exponential moving averages, trying to define what the US dollar direction is, and using the week and day chart to define market direction, what I would classify as the trend direction or new trend direction, and continuation trading or trend break trading in line with that direction. So let's just quickly start. So for me, what would help define what a trend reversal sign might be, one of the main thing I use is Japanese candles, but then of course I like to look therefore also at consolidations, period of indecisions in the market, that whether or not if they're going to break and continue or to reverse. Formations such as double tops, head and shoulders, and alike can also give good indication of market direction. Say for example here, we've got ourselves a multi-week trend up. This is the Euro USD on the daily chart. We've got a multi-week climb, if not multi-month. We then have what I would call probably one of the best signs for a market reversal in Japanese candle reading, is simply the price violently climbed only to be completely engulfed the next day and beyond. So that would be, as you can see here, the market then solidly reversed. If we were to have a look at some other examples, let's see here, where is this? Well, here's a Japanese candle formation known as the hammer. That's a particularly long-tailed hammer. In fact, I traded that. It took several days before the actual market fell, of which once it did, it fell 180 pips. I closed the trade here and actually entered into a long at this point, based on something else which I'll quickly mention, exponential moving averages. Now, this particular one there's a couple that I like to use. This particular one would be the 55 exponential moving average. Oh, it doesn't want to come on. Why don't you want to come on? Trend moving average. There. So as you can see, and then we had another Japanese candle or a rejection sign here, and for another reason I'll explain later, I went for a long here. So when I go to say like continuation trading, so therefore so here in this case the market is violently climbing, there's a consolidation period. Continuation trading would be the breaking of that trend line. If we would bring that down to the 4-hour chart, Here you are. As you can see here, these are clear defined touches and the market breaks. So your entry would be, you know, in this area. Maybe one entry here and a second entry on the confirmation of the candle close. What I wanted to also mention here is this pivot points. Pivot points, I would classify it's a term that gets widely used and it can mean different things. For me, a pivot point is where the market has clear climbs and then falls, comes up again, is rejected, falls, comes up again, is rejected, but then is climbing above. So that's how I would be drawing trend lines based on these pivot points, these very distinct, definite highs and lows in the market. So yes, actually here we are. So we just touched a little bit there on flags and trend line continuation breaks. Where are we? So let's see if we can find some more. So therefore, on the 1 day chart, we saw that as a strong reversal sign. This engulfing Japanese candle. So now we're looking at moves down. So here it is here. So we're looking for moves down. So it can be in flag form. There's a flag form. In fact, there's a number here. It's a bit of an odd one. There's flag forms there, and so that's how you. Now, of course, I've still got my 55 moving average mentioned there, but I'm not going to keep that on the screen. Keep it blank. Well, let's just look then at, say, Fibonacci. Let's see. Let's just mark out. Now I've gone and personalized my own Fibonacci levels. Let's look at this one here. This is a good example. So what you do is you're looking for the initial primary thrust up, and then for when there's a retracement that comes down to the 61.8 level or 50% level or 38.2 level, where it finds support. And yes, I'm going to draw another pivot point type trend line, a flag type trend line. And then in this case, the 161.8 level is certainly a resistance level. In this case, it did actually climb higher, but that was it can well be a normal reversal point in the market, or a time when you can go and take your profits. So that's I will expand further on in future videos. Let's just zoom in. Oh, actually, here's another reversal sign. Okay. So market climbs up healthily and strong, only to be violently reversed. There's actually a very strong, long-legged day move, only subsequently to be engulfed entirely. Let's see, Fibonacci. Let's just have another look at Fibonacci. What do we got here? Now, I actually have found that if you bring this into at least the bodies of one of the ends, it gives perhaps a more accurate result. So as you can see, the market came down, then came back and retested this area over the course of the next week, and then continued its move down. It found support at the 161.8 level, but however, it did actually continue, and then fell down and reached the target of the 261.8 level, which would be definitely a good area to close. Now let's just zoom in again. Let's just touch quickly on the 4-hour chart. I think I'll do. It's difficult to find where we are. So then again, yes, we're looking for flagging action. We're looking for trades in the continuation of that move, and they presented themselves on a number of occasions. Okay, as you see. So the next thing I would like to just quickly touch on is historic levels. So Let's bring that back out to the 4-hour to the 1-day chart. So the initial breakdown comes back up and travels down. This ended up becoming what you'd classify as a historic level. So that's another thing that I find is an important point to look at. This is as an historic level. Let's just come back again to the 4-hour. So as an example, the market came up and clearly rejected off this historic level. 4-hour charts I don't really like to look at for market direction, but actually here's another historic level. This Fibonacci level actually ended up becoming a bit of a historic level based on probably for 2 parts. It coincided with this low here. It was the 161.8 levels point there, but as you can see, the market started to refer to it as a support and resistance. Sometimes it just ignored it, other times it did actually find support resistance. In this particular point here, the flag actually after this particular fall, the flag that developed over the course of 2 weeks. Patience is the aim in this game. Sometimes you've got to wait, but when the market clearly demonstrates itself, that's when you're in, and that's when you can seriously make good money. So the market came up and created a flagging action, which was then held by this same 161.8 level, this historic level, which initiated back here. Again, we've got this other historic level, and as you can see, the market had trouble with those levels. Just while I think of it, let's go to I'm just going to clean this entirely up. In the current time frame, which we're in here in September, a historic level, price action moves up, has found clear resistance, and then now the market's fallen. Again, you have that same old. Market climbs, only met with a strong engulfing candle. Now this is a number of weeks. I did actually enter in onto that position there. The best thing to do is just to leave the trade open until you do get another reversal sign. You might get caught up in these sort of consolidations, and your trade doesn't go particularly far. But when it does, it travels 500 odd pips. Look, here's another one here. So we've had quite a few these similar formations, and we're in a bit of a channel now. So what else did I want to quickly touch on? I don't think I have time to touch on the US dollar. Let's just see. Yeah, look, I might just leave the video there. I think we're probably already over the 10-15 minute mark. I'm going to continue some of these other points which I've missed. Probably with the very next video I'll touch on that. But the following videos that I produce will broaden on each one of these points. I just wanted to create this introductory video at first, just to give you a bit of an idea what I use to make my decisions when entering and exiting trades. I appreciate you viewing this video, and I look forward to your comments / your visits to future videos. Appreciate it. Thanks.